Hey there, and welcome back to another weekly Canadian real estate news recap here on Bald Prairie Real Estate. My name is Matthew Pfeifer from Real Estate Agent in Regina, and that is my trusted assistant, Matilda. This is where I go through what I found was the most interesting, exciting Canadian real estate news for the week and give you my opinion on it. But of course, we to start off with another one of my terrible bad dad jokes. How do you get a baby astronaut to sleep? You rock it. If you have a terrible joke that I can use in a future episode, put it in the comments below. Let's get into this week's news. I want to start off by talking about effective amortization compared to the contract amortization, because you probably have seen articles like I've got on screen right now saying that banks are allowing Canadians to extend their mortgages to 30 and 40 years. And while this makes a really good headline, it's also not really accurate. When you have effective amortization, that is, like the word says, effectively how much time you have left before that mortgage is paid off. So let's say you have a static variable. This is somebody who has a mortgage payment that does not change in terms of the total dollar amount per month. It only changes how much they're paying on principal versus interest as interest rates rise and fall. When interest rates rise, more of that payment goes towards paying interest and less goes towards paying principal. And if it continues to increase, it gets to a point where that effective amortization extends out. And that's where we get this 30 and 40 year amortization that people are talking about, where it's going to take them way longer to pay off their mortgage. But as interest rates drop, that effective amortization will also decrease. This is different though than the contractual obligation. So when you sign your mortgage, you're saying you're going to pay this house off in typically 25 or 30 years. So you go through your first couple of years of paying that mortgage down. As interest rates have increased, that might extend out that effective amortization to say 35 years. But when you go to renew your mortgage, whether it's a 5-year term, 2-year term, whatever you took, you have to go back to the contractual obligation. So that means that you cannot make those payments over 35 years. They have to be with what is the balance remaining. So if you signed a 25-year mortgage and after 5 years, you have to then reestablish those payments over now 20 years. You can't extend it out to 35 or 40 years. I know that's what's being said in the headlines, but it's not accurate. So what happens to those that have these static variables that have these extended out amortizations? Well, a couple of options. First is that they're going to have to potentially make a lump sum payment to get caught up so that that amortization schedule stays on track. Or their monthly mortgage payment will increase, again, even if they have a static variable payment, that will increase to make sure that it's paid out over the proper contractual amortization schedule. Or if they have enough equity in the house, they may have the option to refinance the property, which will allow them to essentially go back to a longer mortgage, typically back to that 25 or 30 years. That's all you're going to be able to get. And then that would reduce their monthly payments. Now that, when you're refinancing, is kind of the middle ground between making that lump sum payment and having higher mortgage payments. But again, they're not going to be allowed to extend out that mortgage to 35 or 40 years. This could change in the future, but as of right now, that's the rules. So I know this gets put on the headlines that everybody has these 35 and 40 year mortgages. It's really not true. Of course, probably the biggest news topic this week was talking about the inflation numbers in Canada. Stats Canada was out with its newest inflation data. In the previous month, the inflation rate was 4.3% year over year. The market was expecting this month's numbers to come in at 4.1%, and they came in at 4.4%. Again, that's the headline numbers. The core inflation number actually dropped from about 4.5 to 4.1%. Part of that inflation has been driven by higher mortgage costs. In fact, 30% of that higher inflation is due to how much higher interest rates are year over year, whether it's people renewing into higher interest rates or just those variable rates going up. And also the price of rent, which we've seen skyrocket, is driving inflation higher right now. That, of course, is people asking, now does that mean the Bank of Canada is going to raise interest rates because inflation is going back up? Personally, I think if we had seen the core inflation also trend up, the Bank of Canada would have been much more likely, or will be much more likely, to raise interest rates. Because that core inflation, which is one of the metrics they are strongly watching and weighing in their decisions, because that trended down, I think they're less likely to raise interest rates in their next meeting. I'm not saying they won't do it, but I think they're less likely because that trended down. We're going to have to wait and see what the Bank of Canada does here. Maybe put in the comments below. Do you think this is going to cause the Bank of Canada to raise interest rates, or do you think they continue to hold to wait and see what happens with core inflation? And speaking of inflation, the rentals.ca monthly rent report is in, and once again, the average rent in Canada is over $2,000. Although it is essentially unchanged from last month, it is up 10% year over year. The usual suspects of Vancouver and Toronto top the list of the most expensive places to rent in Canada. And of course, the prairies continue to be the most affordable places to rent in Canada. But I wanted to go through this list and see which cities in Canada saw the largest year over year rental increases. And a few of these actually surprised me. In third place was Scarborough, where rent went up 25% year over year. In Laval, and that's the one that surprised me the most, rent was up 26% year over year. And the most expensive place to rent in terms of increases year over year, Brampton saw rent prices increase for a single bedroom 28% and 27% for a two bedroom. In fact, 7 out of the 35 cities that rentals.ca tracks for rent prices saw 20% or more year over year increases. That is staggering how much rent is increasing in Canada and how fast it's increasing. Surprisingly, Quebec City and Victoria both saw year over year declines. And the last article for this week is the CREA stats for home prices in Canada, and they're tracking that home prices have increased $100,000 since January. Most of the predictions by the real estate companies, the banks, and economists all expected that home prices in Canada would bottom out in the spring market and then start working their way back up. It appears right now that that has happened, but earlier than expected, because it seems that home prices bottomed out in about January of this year, as they've been now trending up. We saw a 4.3% month over month increase in April alone, and that of course gets us to that average home price has gone up $100,000 since January. Now, if you watch my monthly Canadian real estate market updates, which if you don't, you really should, I'll put a link to that in the description of this video, and I'll have a pop-up card at some point here, it'll pop up. But you would probably already know this, we've seen home prices in Canada increasing now for a number of months in a row. And one of the biggest reasons that we are seeing home prices start to increase, even with higher interest rates that we have right now, is the lack of inventory available. The number of homes for sale fell to a 20-year low. And of course, the population in Canada has increased a whole lot in the last 20 years. So why do I think that we're seeing this severe lack of inventory? Well, we already started with a lack of homes in Canada to begin with. And then we've seen now record population increases that well outpace the ability for homes to be built at the same pace in Canada. We simply can't keep up with the current population growth, at least until we see some sort of ability to build far more houses than we currently do right now. And sellers are simply not putting their houses up for sale. If you take buyers, I like to call them the move-up buyers. Those are somebody who already has an existing home, generally a starter home, and they're looking to move into a larger home. Well, they're not making that move right now, and so they're not putting their houses up for sale. They're looking at how expensive that move is going to be, whether it's the monthly cost because of interest rates or how expensive that house is to begin with, and they're saying, I'm not going to make that move. So that creates essentially a logjam for first-time home buyers who will be looking to buy those starter homes when those move-up buyers move out of them. Well, they're just not available right now, and now we've got more first-time home buyers competing for fewer houses, which is driving up prices. And if you look at how expensive it is to build a house with higher interest rates or get a big condo project built, well, they're just not happening. We've seen a lot of projects get shelved because how high interest rates are, that just doesn't make it profitable anymore. And so we're seeing in the data, fewer homes being started. Essentially what we've got right now is the Bank of Canada is creating a problem where mortgages are more expensive, inflation is going up because of higher interest rate causes, and because we're seeing fewer sellers want to sell their houses because of those higher interest rates, they're not putting them on the market, and developers aren't building more houses because of how expensive it's got. All of this is combining to make housing more expensive, more unaffordable, and more unattainable. Now, if you do want to check out that monthly Canadian housing market update that I do, right here, take you straight to it. If you love this video, please give this video a like. If you love learning about Canadian real estate, subscribe to Bald Prairie Real Estate. Button's right down there. Leave comments below because I love chatting with you guys in the comment section below. And as always, thank you very much for watching.